When I go to people and they say to me, hey, should I buy Bitcoin? The answer is naturally going to be, yes, I think so. Why? I don't know how to answer that question. That's the problem. I don't think you must make predictions. I think you must have a thesis backed by data, and you must protect yourself from the downside and let the upside take care of itself. My thesis based on data is that there is a possibility that the Bitcoin low could be $40,000. I think no doubt that we are in a bear market, and the question is, how long is the bear market actually going to last, right? And how low can we actually go in a bear market? So there's multiple ways to look at it. If you look at all previous bear markets, usually the most reliable indicator of where we're going to go is this 200-week moving average, right? So if you look at like 2017, over here, we touched 200-week moving average. 2021 was a major deleveraging event. We went slightly under the 200-week moving average, but then we bounced back above it and we carried on with the next cycle, right? So you kind of see that this becomes the relevant stop for when the bottom of the market's going to be. The problem is that if you look at how long it took us from the top, which is over here, to the bottom over here, in this case, it took us 210 days to get from the top to the bottom, right? And if you look at the 2017 bull market and you go from the top to the bottom, it took us 371 days to get from the top to bottom. The problem in this bear market is that we went from the top to almost touching the 200-week MA, and we did it in 112 days, okay, which means that things are happening much quicker now in this market. It also means that if you look very carefully, we actually haven't touched the 200-week moving average, right? So where does that leave us? One option is that we have a less shallow bear market because we had a less shallow bull market. And if you think about what markets are pendulums, but that swing from overbought to oversold. Now, when a pendulum swings a little bit and it swings back the other way, also a little bit, it swings back also a little bit. And so it could be that we're just not going to have such a bad bear market because we never had such a good bull market. That's option number one. Option number two is that we are going to have a bad bear market. This little bounce that's happening now is just a normal bounce. You have them in pretty much every market. You had one over here. You can see it over here. You had one over here. This is a normal bounce. It's a normal dead cat bounce. And this will eventually be sold off, and then we'll go down. Now, if we go down, how much do we actually go down? Well, this is where it gets a little bit scary, right? So if we take top to bottom here, what you realize is that we were 77% down here, top to bottom, right? And if you go to the previous bull market and you take top to bottom in the previous bull market, which is here to here, top to bottom, also 83%. So 83, 75, 70% down. Where does 70% down take us? 70% down takes us to $40,000, right? So if you take this and you go all the way down and you plot down to 70%, there we go, 70% takes us to $40,000. So, there is a case to be made that Bitcoin could go down to $40,000. There is that case to be made. There's also a slightly more bullish case that is presented, which says we just didn't go as high as we should have, and therefore we probably won't go as low as we should have. So that's the way that I'm playing it. I'm open to a shorter bear market with less of a drawdown, and I'm also just in case I'm ready for a $40,000 Bitcoin.
Yeah, I also believe that since we didn't have a very pronounced bull market and blow off top like the one we had in 2021, it's a likely scenario that perhaps we're gonna trade a bit lower, but not that much. But let's see. It's impossible to predict with 100% certainty for sure.
Our job as market analysts, I think the biggest problem that market analysts make is that they make predictions. I don't think you must make predictions. I think you must have a thesis backed by data, and you must protect yourself from the downside and let the upside take care of itself. And what does that mean? My thesis based on data is that there is a possibility that the Bitcoin low could be $40,000. What I do to protect myself is that I make sure that I don't get liquidated when Bitcoin does hit $40,000. If Bitcoin doesn't hit $40,000, I smile all the way to the moon. And if Bitcoin does hit $40,000, at least I know I'm safe. So generally, my attitude with things like this is, specifically in a bear market, you manage the downside and you let the upside take care of itself. And that's the best strategy that you can have.
We are seeing a lot of volatility going on, especially in the energy market, in the oil market. We saw that the price of oil skyrocketed towards unprecedented highs in a record time frame. I see two main theses being discussed. So the first thesis is basically disruption of energy supplies. Energy prices goes up, therefore inflation goes up, therefore governments are not going to lower rates or to increase liquidity into the system because they are afraid of inflation, essentially. Then this other thesis that says, on the contrary, the spending that the US is doing to support the war will eventually force the authorities, the monetary authorities of the US, to print more money, to increase liquidity into the system, and therefore to boost Bitcoin and the other crypto assets. So these two are two contradicting theories. Which one do you believe is the most likely to play out?
So first of all, let's talk about the reality. You need to remember that we are in a war, and that we're in a war with a country that is the enemy of the Western media. In other words, the Western media have always portrayed Iran to be the enemy of the world, the same way that they've portrayed Russia to be the big enemy of the world, right? So I think it's very important that you remember that you don't know what's actually happening in the war. You don't know. You're hearing one side of the war. You're primarily hearing the Trump side of the war because, Iran's not getting any airtime at the moment. And so what you're hearing is a very, very, very one-sided story. The answer to me always lies in the charts. Okay, now here's the oil chart. As we know, this is an oil war. It's about disrupting oil production. It's around the state of Hormuz. It's a thing, and also we can see it actually. Oil's been on a downward trend line for. I mean, you could say the downward trend line started here in 2022, and we've been on a downward trend line ever since then until we get to here. Now, I call this line over here the war line, and for as long as oil is above this line over here, the war is on, and for as long when the war is over, we'll go below the war line. The problem is that there have been multiple timelines given on the war in Iran. First, it was we've won the war. Second, we almost won the war. 4 or 5 days, 4 or 5 weeks. We can fight forever. So the problem is you don't know who to believe. And the only thing that you can actually believe is to believe the charts, because you know why? The charts are where the money's flowing. And usually people put their money where their mouths is, right? It's going to be 1 week, 2 weeks. Where's the money? The money is telling you that this war is going to last a little bit longer. What I'm understanding is that the US is still sending supplies to the Middle East. If they thought that the war was about to end, they wouldn't be sending supplies to the Middle East. If you're thinking of packing up the house, you don't go and send a whole lot of new supplies into the house, right? So that is how I see the war. Now, what happens with the war? The war is a very, 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 very big problem. There's two problems when it comes to this war. The first problem that comes to the war is this problem over here, which you can see in the Korean stock market index, which is called the Kospi. And the reason why you can see it so clearly in the Kospi is because the Kospi is down 20% this week, or from top to bottom was down 20% this week. Why? Because they need oil to manufacture the chips that power AI, right? In Korea, there's two companies that are very, very, very strong in AI. They make up the majority of the market. And they need oil to produce the chips and the stuff that they need for AI. If they don't get the oil, the problem is that they can't supply all the chips we need for AI. What holds the stock markets up today? The AI indices. They're the ones that basically hold the market today. And all of a sudden, we're not getting the chips or the memory or whatever it is that we need to get out for AI. Can you imagine what that does for global markets, right? That's the first problem. The second problem is that increased oil prices are going to cause increased inflation. And the last thing that Trump wants in the short term, increased oil prices are going to cause increased inflation. In the long and medium term, there is an argument to say that maybe they will cause deflation because prices will go up, people won't be able to afford as much, they will therefore be able to spend, and then we'll get a deflating economy. But for now, for the next couple of months, if the oil price stays elevated, as it is currently, the problem is that it is going to increase inflation. Increasing inflation, what are we in today? We're in March. So March, April, May, June, July, August, September, October. There's 8 months until the midterm elections. The problem is that this high oil price won't be read in inflation for the next 3 months, right? Because it takes 3 months for the oil to be bought, the goods to be produced, etc., etc. And so that means that if Trump doesn't end this war really quickly, then he's going to go into a midterm election not being able to reduce rates because he's got a new Fed chair, but the new Fed chair is going to turn around and say, listen, guys, I want to cut the thing, but I'm reliant on the data, and the data is telling me this is a fucking shit show. And at the same time, he's going to go into midterm elections with a elevated inflation. That's the worst case scenario for Trump at the moment. And they've got to make sure that the oil price doesn't go above or doesn't stay above $90 a barrel. At $90 a barrel, the estimated inflation rate is 3.1%. Okay. If we can maintain $90 a barrel, inflation goes up to 3.1%. Okay, that's okay. But if you go to 110 and you go to 3.4%, if you go to 120 and you go to 3.7%, now you've got yourself. Now you're digging yourself a big hole with a big problem.
Let's say that that it doesn't play out as you say, and we're gonna have a prolonged war over several months. What do you think is gonna be the outcome in that scenario?
In that scenario, I mean, there's no other way to look at it. Risk markets crash. Whether they crash because of a disruption of a supply of critical materials, whether they crash because interest rates are now forced to go up again because of the inflation that oil has caused. Either way you look at it, it's a very bad scenario. And I'll tell you why it's also a bad scenario. I think we're also going to get into a jobs crisis towards the end of this year. So I think like it was all great that we all started using AI and that, but now there's bots. Bots are really starting to replace humans. I mean, I'm going to quote a very famous layoff, which was the Block Jack Dorsey, how many people he laid off. I think not today, but I think in 6 months and in 12 months, everyone's going to start doing the same thing. And you're going to get this mass offloading of these blue collar, these white collar workers. And when you get that mass offloading of the white collar workers, you're all of a sudden going to get a very high unemployment rate. And so I think that you're going to have high unemployment and you're going to have high inflation. And that's not a situation you want to be in, specifically going into midterm elections. I think if that happens, that the Democrats win the House and the Senate.
Yeah, definitely. Trump is making a lot of statements. The statements he makes tend to be quite erratic because he was saying that he would end the war in Ukraine in 24 hours. And we are still here after over 1 year of his presidency. And he has been saying multiple times that the deal was almost there. So even when he says that the war in Iran is almost done, then I'm very skeptical about
let's give Trump the benefit of the doubt and say, look, the Ukraine war was not a war that he started and he picked up pieces from the Biden era, right? So I don't think you can blame him for the Ukraine war, but let's talk about the other war, which is the war that he did start. He told us it's going to be over in 4 to 5 days, and he told us it's going to be over in 4 to 5 weeks, and then he told us it's going to be over in a couple of months, and then Pete Hegseth came out and said we can fight this forever. So I think we need to judge him on the wars that he's in control of, so to speak. You know why I have to trust the charts? Because I can't believe the headlines, because the Western media are very biased. In a situation like this where I can't decipher the headlines, I've got to believe what the money is telling me, right? Because they got the most to gain and the most to lose. Opinions on Twitter, nothing to gain, nothing to lose. Headlines in the press, try to gain clicks, and the lose is credibility, but they have so little credibility that they don't, I think they don't give a shit anymore. So you got to believe the chart.
I think you also believe polymarket in the sense because it's also where people put their money on the line for predictions.
Exactly. Put your money where your mouth is.
I was listening to one of your interviews where you were saying that one of the main reasons why you are in crypto right now is because of the AI agents narrative. You believe that AI agents will run on crypto rails. Why do you think that's the case?
Let's forecast what the world looks like in 24 months. So today I've got 2 dedicated bots, 2 dedicated AI agents that work only for me in the company, right? One of them is a researcher, and one of them is in essence, a personal assistant, right? Book me this flight, find me the cheapest flight, find me the best, all that stuff. And the other one is a researcher of crypto content. Both of them live on Mac Minis next to my desk, and they run themselves as autonomous agent. I believe that in a couple of years, weeks, months, I think we're all going to have 100 AI agents. And I don't think we're going to have a lot of staff. I think, to be honest, most of our staff are just going to be data centers of AI agents. Now, the one thing about these AI agents is that these AI agents are going to transact with each other. And you can imagine that they're going to transact with each other a lot more than we transact with each other, because there's no barriers and you can transact microtransactions. And I believe that we're going to get a second economy, which is a digital economy, which is much bigger and much more robust than the current economy by orders of magnitude. So the orders of magnitude, I almost think it's like the people that were using coal to fire up their houses and their lives will now use electricity. Can you imagine, like, explaining to the people that use coal, one day we're going to have this internet, and this internet's going to be powered by electricity? They just can't comprehend it, right? Like, I think that's how big this revolution is. Now, so that I know for sure. That's like a given. I think we both agree on that. I don't think anybody can disagree on that. The second data point is you say, okay, what are all these agents going to have in common? Well, the agents are going to have no common law to be able to settle transactional disputes between them. My bot trades with your bot, okay? For many years, there's not going to be any law that's going to be able to determine whether I owe you money, you owe me money, etc. Okay? So what's the only thing that will allow agents to do that is this thing called a smart contract, right? And the smart contract will say, you follow the rules of X and you will be paid Y. You don't follow the rules of X, you don't be paid Y. It's binary, it's black and white. That's basically just what it is, right? Has to be built on crypto rails. There's no other way to do it. There's just technologically, there's no other way to do it. Then the problem is that these agents need to transact with each other in a trustless way. So my agent needs to transact with your agent. You don't know me and I don't know you. And the two agents need to transact with each other in a trustless way that is irreversible. Because otherwise, it can't be Visa, it can't be MasterCard, it can't be PayPal. It's got to be irreversible because it's got to be trustless, right? And the only trustless money, I only know trustless money that lives on blockchains. I don't know any other trustless money.
So why do you think that it couldn't just function as well on traditional financial rails?
Because traditional financial rails can't keep up with the cross-border, trustless, fast nature of these payments. It's impossible.
You have been in the industry for several years, I believe since 2015, more or less. What is the core thesis that you used to have that has changed since when you started? If there is one, what would that be?
So I think the way to look at it is I'm very confused about what Bitcoin actually is. So, when I came into the industry, Bitcoin was this peer-to-peer money that you could transact without government intervention. Anybody could send money anywhere. The government wasn't around. Then the thesis changed from peer-to-peer money to it's a store of value. But in this cycle, Bitcoin wasn't really a good store of value. And so now the problem is when I go to people and I say to them, they say to me, hey, is it a good time to buy Bitcoin? Or they say to me, hey, should I buy Bitcoin? When you say, yeah, the answer is naturally going to be, yes, I think so. Why? And then the question is, I don't know how to answer that question. That's the problem. So I know it's not money, right? It's very hard for me to say to someone that it's a store of value when every other store of value has been in a raging bull market, and our store of value has been in a bear market for the last couple of months. And so the biggest crisis that I have at the moment is justifying to myself what Bitcoin is and where Bitcoin derives its value from, right? So I believe that what is Bitcoin, I do believe it's a store of value. I just believe that it didn't act as a store of value when the other store of values were running, right? I think it has one more chance, or another chance, not one more chance, another chance in this war. And if in this war it can maintain, grow, etc. And people say, and that's why on the one hand, and I know this sounds very terrible, but I actually kind of hope that the war continues a bit longer. The risk assets go down. I hope gold maybe also goes down, and Bitcoin actually goes up. And then everyone says, oh, hold on a second, it is a store of value. It just was on a correction, and now it is back to being a store of value. So I think that's one of my, I want to say my like a good base case. Does that make sense to you? You know, like a good base case. Yeah. I think that it is I think that it has a good chance now to become a store of value. And if it does, then we don't have a narrative problem. If it doesn't, then we have a narrative problem. And the problem is that, you know, in the old days, it was pretty easy to tell people why they should buy Bitcoin, but it's very hard to tell people why they should buy Bitcoin today. And that's the problem.
But don't you believe that it's enough to show them that historically Bitcoin has been the best performing asset of the last 10 to 15 years?
Do you watch football?
Not a lot.
Well, any sport. I mean, you get a player, the player plays on the field, and for 10 years, the player scores all the goals. And then for one season, the player doesn't score any goals. And what do people say? They say he's not the best player anymore. He's not such a good player anymore, right? And so you can't take a young, because any good fund manager will say, okay, you had this young asset, which was, you know, went from 0 to X, and then it wasn't really a store of value. So what actually is it? And then, like, I mean, if you want to be really critical of it, there's really only one buyer in the market right now. His name's Michael Saylor. He buys on average $500 million a week. You know, there's really only one. I mean, there are other buyers, but if you want to talk about the one consistent buyer, it's this crazy madman that is taking money from one person and promising that to repay it with an 11% annual dividend yield forever. I mean, just like you know, as a fund manager, you have a lot of tough questions that need to be answered, right? So Bitcoin basically has to recover now and has to prove now that it's a store of value. And if it doesn't do that, then we have a bit of a problem.
Ran, thanks a lot for the conversation. It was a pleasure.
Such a pleasure, my brother. Let's chat soon.